Good morning, everyone. This is Daily Trading Analysis with the weekly recap for another turbulent US markets week. As you can see here, we have a bunch of good positive data from the core PCE and inflation and some Michigan 1-year expectations, and also even the Nvidia earnings were a little bit better than expected, increasing EPS, increasing revenue, a little bit of concerning AI, China sales, but overall, look at all these green. I think this is the first time in this channel that I reported all green, but look at down below. We have a 35 sentiment analysis. Why? Because this is economic data, but it's not all the fundamentals that I will be covering here today. Because there has been a dramatic intensification of trade disputes. We've received confirmation that Trump intends to increase tariffs on steel and aluminum to a staggering 50% next Wednesday on June 4th. This is not a minor adjustment, it's a significant escalation that threatens to trigger retaliatory measures from all the global trading partners. So basically, beyond these broad-based tariffs, there's also the tech sector found itself directly in the crosshairs. Why? Because Trump's directive for US teams designers halted sales to China. This is a major offensive in the ongoing tech war, carrying severe ramifications to the semiconductor industry. Furthermore, reports indicate that the US is planning wider China tech sanctions, including a crackdown on subsidiaries of Chinese firms already under these restrictions. So there's a big push from the federal government, from Trump administration, to crack down China in terms of tech. And that's affecting the sentiment overall in the Nasdaq. Apart from these tariffs that are going to affect everything, we have also a focus on concerning tech growth. Apart from this, adding to the trade-related anxieties, an appeals court reinstated President Trump's previously blocked tariffs. We all knew that on Tuesday, we were ahead of Nvidia's earnings and we woke up with a good, even better news that some courts were were pushing down all these tariffs because they were illegal. So now some other appeals court reinstated these blocked tariffs. So we are again at step one. And that's why we are going to see that into the charts. That's why we had a big spike. We were at 3% from all-time highs and we failed. And that's going to be a focus in today's technical analysis, because that looks to me like a failed action higher to all-time highs. And that's when we go down to the same levels and we failed. I mean, bulls are trapped, sellers might step in and push price lower with this momentum and negative fundamentals. So this is going to be a really interesting analysis, because even though we have certain good things in terms of PCE, we have good data points. I mean, we got the core PCE increased by just 0.1% month over month. That's really, really good. And that's the second time we went from the 0.0 previous to just 0.1. We got also in terms of the headline, also 0.1. So both core and PCE prices are coming down, are not even increasing, almost barely 0.1. And we are at 2.5 year over year in the core, and we are at 2.1. This is a big goal, big target for the Fed. The Fed is watching this, the PCE, and also some consumer inflation expectations, were also going lower from 7.3 to 6.6 and the 5-year expectations to 4.2. I mean, these are not good data, but they are coming lower, they are coming down. And if it were not for the tariffs, I'm 100% sure that the Fed was already positioned themselves to lower rates, but we have the tariffs. Just a little nuances from Nvidia earnings. I don't want to cover a lot of these because they were just good, but they are nullified by the tariffs. Anyways, we have really beat in APS, beat in revenue by almost 1 billion, exceeding expectations, but there were a little bit of concerns about the broader tech sector if it's going to continue this momentum, because President Trump's order for US chip designers to stop selling to China and the plan for further tech sanctions, this is a significant systemic risk for the semiconductor sector and industry. This is going to affect not only Nvidia, but all the stocks in that market. And we are AI-driven growth, so we have to really be careful on that. Finally, some Feds were, let me just confirm this. Yes, Fed Powell and Trump met in the White House. So basically, we had a meeting between Jerome Powell and President Trump. And we had a statement from Powell saying that they did not discuss monetary policy, but it was an important communication between both of them because they have to work together. It underscores the Fed's independence, and we have to see communication between both of them. Also, John Williams, the Fed Williams, highlighted that the market dysfunction observed in April, which was basically 100% attributed to tariffs, it was well anchored in inflation expectations. So basically also Fed Cascari said that this patient approach from the Fed, it's really key to provide clarity on the economic impact of tariffs. The current policy stance from all the Fed members, including Barkin and Daly, it's a holding pattern. The same way we are going to see this holding pattern in the technical analysis in the daily. So let's jump straight into it because we are seeing this holding pattern up here in a really key area of resistance with 2 daily inverse fair value gaps. And if we check the 4-hour, we can see the fail action higher. So we see this basically holding pattern, this failed auction, and we are again at 70% of this range. We bounced a bit on Friday, but I mean, we need to see 21,500s more or less to really see that we reclaim that. If this zone with this inverse fair value gap, let me just do that for clarity. If this inverse fair value gap does not, this is a 1-hour inverse. If we cannot take this inverse is going to be anchored on all the sellers to push price lower. We have also this bullish fair value gap, which was beautiful in terms of support. Look at the good bounce on that. So we are in the middle of this range, right in the middle between 2 keys fair value gaps, and this failed auction higher I mean, what I'm going to be watching, it's this level. This sell side liquidity has a lot of buyers. So I would like this to be taken again and reclaim this again. If we don't see that, that would be what I was expecting as a bullish pattern. If we don't see that and we reclaim this and push lower and go towards this sell side liquidity, I will be totally bearish and we might see a bigger pullback because June 4th, it's right here. It's right here. And it's when the tariffs on aluminum and steel will come again at 50%, and it might be a big day in terms of volatility. Some market internals that I would like to share, look at the big push on Tuesday in terms of volume, in terms of advanced decliner, and in both ES. I mean, look at the ES. Look at this. It was 400 million in inflows. Brutal. So Tuesday, a lot of buyers were stepping in. And what happened with these buyers is that they basically got trapped. Or they bailed, or they got trapped. So we might see some more flashes down and volatility will increase for sure. In terms of semiconductors, what I was mentioning earlier, we have again a holding pattern with also a failed auction up here. So we have this failed auction and it's a holding pattern again. Everyone was betting on this push higher, and I mean it was good, but we are in a situation in which a lot of them are in the negative, a lot of banks were in the negative. If we check the financials are also trying to hold. Everyone is waiting, everyone is expecting, holding their positions, trying to see if there's any positive catalyst to attack the all-time highs. But the fundamental analysis, it's quite risky. In terms of RSP, we are also holding. We've seen momentum cooling down a bit, but the trend is good. The long term is not yet supported by a big 60%. It's what I mean for a good trend with a lot of people in the long-term investment. And also what is concerning is this curve on the long-term yields for this year. This is July. I mean, more and more we are pricing in less and less interest rate cuts this year. So there's a lot of things going on. In terms of technicals, I'm worried about this push that was barely at 3% of all-time highs. Let me just, it was 3.60% away of all-time highs and it failed. And if we start seeing again some kind of people again pushing and we take again these highs, that would be great for the all-time highs. If we don't see that and this inverse fair value gap stops the price action, I will be more and more worried. So we are in a situation in which we have to wait and see again and again and again. Control our stops, control our risk. We cannot marry trades, we cannot push for longer trends because this is really bad price action. The long term, the big investors are already in since this low right here. So for day trading, this is super tricky. Difficult to trade price action, a lot of volatility. With one tweet, you can change the day entirely. And we have to really be patient and disciplined. So that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel. I do this almost every Saturday, from the fundamentals, from the news, inflation, economic data, Fed statements, earnings. I cover everything to give you a complete picture about the markets. So this is why I think you have to be doing this to really understand what is happening. You cannot just bet on everything. You cannot just follow only price action. You have to understand the situation, and that's why I'm putting videos in this channel for you. Remember, patience, discipline, and risk management are key for your success. Stay safe, everyone. Have a nice weekend. Try to disconnect, and see you on Monday.